Hi, it's Ian Coleman and this is your weekly market wrap up. It is Friday the 7th of March 2025. It's just coming up to 3 o'clock in the afternoon in the UK. Well, we've just had the US non-farm payroll data, came in roundabout as expected. US indices, we're seeing consolidation. We're going to be talking about that in a moment. This week has been dominated by Trump and tariff talks. We've seen a really aggressive move to the downside in DXY, which is the US dollar index, and as such we've seen an aggressive move higher in euro against the US dollar and also sterling against the US dollar. In this video I want to talk about various products. I want to talk about Bitcoin. That could be one to watch over the weekend. We're going to look at US indices. We're going to be looking at dollar yen, sterling yen. We're going to be looking at gold, and we're going to be looking at the US 10-year. Now, what I intend to do is to look at multiple different time frames to break down price action to highlight possible trading opportunities going into next week. Correlation is a big factor to my analysis, so risk on, risk off. Obviously, if I'm expecting a move to the upside in US indices, then I should really be looking for a move higher in sterling yen and dollar yen as yen gets sold off as a safe haven asset. So let's get to the charts. The first chart that I want to look at is Bitcoin. Just to explain what we have here, we've got multiple time frames. This is a monthly chart, weekly chart, daily chart, 8-hour, 4-hour and hourly. And it's really these two time frames that I'm interested in over the short term. This dark line here is actually a bespoke support level. So I've developed a system that highlights medium term support and resistance levels, and when these line up with different chart formations, it adds strength to the analysis. So the first chart that I really want to look at is this 4-hour chart. So here you can see Bitcoin potentially forming what's known as a crab pattern. Now these formations build on the charts, and when they complete they offer quite good trading opportunities. They're built by using a combination of fib levels, Fibonacci levels, and we can see here we've got a confluence area. So that's a 161.8% extension of this move and a 224% extension of this move, and that forms what's known as a crab formation. And like I said, often when we see these patterns build, it will result in a change in sentiment. So at the moment I believe that we're currently moving higher within this BC leg, and that potentially the next move is this CD leg to the downside. Now if we get a break of the previous swing high, which is located at, let's have a quick look, 92,817, it negates this setup. So in other words, if I can get a sell signal here and I'm looking to target here, I'd place a stop loss above this level A here, and these setups can offer very reasonable risk reward setups, but I need a signal to highlight that a top is in place. So if I was to sell at current market price, then I'd end up with a risk reward factor of about 5 to 1 risk reward. Going down to this time frame, and this is what I'm interested at in the the moment, and that is an inside pattern. This is known as a Gartley formation. It's actually completing around about current price, which is 91,090. So this is something that I'm going to be focusing on up until the close today. Going back to the big picture analysis, so we've got this thick black line. If we go back to the weekly chart, what I do like to see is pivots. So areas that have been support and resistance will often act as support and resistance again. And as I previously said in the video, is that I like to see confluence. So the ending of a pattern with support and resistance levels is a good indication that we're not going to see lower price. And you can see here that the week 11th of March it acted as resistance and also close to the previous swing high on the 28th of October. So just to reiterate what I'm looking at Bitcoin, I'm looking for a topping formation on the 1 hour chart, and then I'm looking for possible price action to take me down within this CD leg towards 74,500. Okay, that's Bitcoin. Let's have a quick look at US indices, because I think they're quite interesting after the non-farm payroll figures today. Going to look at two indices. We're going to look at the US 30, which is the Dow Jones, and we're going to look at the SP 500 or the US 500 index. Let's go to this one first. We're going to the 4 hour chart. Okay, what we've seen here is a prolonged period of consolidation. So consolidation at the top, then a breakout lower, and then this period of consolidation since the 4th of March. If you look to the daily chart, we can actually see inside candles. Now, inside candles highlight indecision, and that's what's happening as we get this rectangle formation being formed on this intraday chart. That can be seen or analysed as a Wyckoff accumulation zone. So normally what will happen when we see one of these accumulation zones, it means that smart money is building a long position. Okay, and what has a tendency to happen, it will spike lower, buyers will return, and then it will take out weak stop losses and move to the upside. And if we just put on this tool here, so that we've got all our technical and analytical tools, our oscillators, we can see that this was a previous demand zone. So scope to consolidate a little bit further, then a spike lower to take out weak shorts, and then possibly move to the upside. The S&P is a similar picture, but the fact that we've got this ending wedge pattern, so an ending wedge formation has a bias to break to the upside. I've actually noted some trendline resistance that's currently coming in at 5,788. A break there, and the measure move target is up here at 5,991. So again, there's a possibility for a spike lower out of this accumulation zone, taking out weak stop losses, and then buyers returning and moving to the upside. So correlation. So dollar yen normally has a tendency to mirror US stock indices. So basically what we should be seeing in dollar yen is a period of consolidation, possibly a spike to the downside, and then another drive higher. If we go to that chart, we're going to go to two different time frames here, which I believe are quite important. The first one is dollar yen 1 hour chart. Here we can see that we've made a lower low. Buyers are returning. Okay, this is a large ending wedge pattern on a break of the trend of lower highs, which is here, which is currently located around about 148.23. The measured move target is all the way up here at 151.30. What I like to do in these situations is use a Fibonacci projection tool, just to make sure that I'm not buying into the top of a trend, and actually my preferred stance is to buy into the base of wave 2. So what we could see here is a breakout of the wedge formation, move lower in wave 2, then up in 3, down in 4, and then up in 5. So something like this. Let's just get this all on. What I like to do is just move this lower, the trend line, and try and buy the retest of the breakout level. Okay, so what was resistance then becomes support, and this is, for me, a prime long entry level. If I go to a bigger time frame, like I said, I like correlation. I like for different time frames to highlight different formations, different patterns. And this is the weekly chart. Here we can see a 61.8% pullback level. That's at 146.95. We've made a 146.94 swing low. Okay, we are starting to move to the upside. 151.30 is the measured move target for that wedge formation. So that would suggest that the next move higher is the BC leg in a large Gartley pattern. So just to highlight what we're talking about here, we're talking about dollar yen possibly mirroring stock indices. Okay, so breaking out of that consolidation to the upside. Measured move target is 151.30. Looking at the weekly chart would suggest that the move higher is a corrective BC leg in a larger structure. One yen cross that I particularly like at the moment is sterling yen, because I prefer to see completed patterns, and here we can note a Gartley formation completing at 189.19. Now, why do I like that? Well, firstly, it's a completed pattern, as I previously said. Secondly, it gives me a defined entry. And thirdly, it gives me a defined stop. So the stop loss for me would be underneath the previous swing low, which is at 188.25. Also, it's highlighting the possible completion of another pattern. I'm just going to get rid of those indicators. Okay, higher up. So basically this would be my entry level. This would be my stop loss down here. My target would be the completion of the butterfly formation, and that's all the way up here at 196.75. Correlation, just going back to correlation, higher stocks should mean higher sterling yen as the safe haven Japanese yen gets sold. And then last but not least, let's have a look at gold. I'm going to go to this time frame first. Okay, moving higher, risk on will normally, risk off will normally mean that people, traders, buy gold as a safe haven. We've got a confluence area here, again that will form a butterfly formation. This looks like a Wyckoff distribution zone, so smart money gathering or building a short position. What has a tendency to happen is we see a spike to the upside, and then sellers return and push gold lower. And if we look at big picture analysis, this is the daily chart. We've actually completed what's known as a crab pattern all the way up here. So we could be seeing a medium-term swing high. If we look at US 10-year, and basically what normally will happen here is that we will see, again, talking about correlation, there's a correlation between US 10-year and gold. When US 10-year moves to the upside, gold will have a tendency to move lower. And what I see here is this level here acting as quite decent support, and this level here potentially acting as quite decent resistance. So a large head and shoulders pattern, so this being the left shoulder, this being the neckline, this being the head, down to the neckline, and then push higher to this right shoulder. So correlation, if US 10-year continues to move to the upside, then really what we should see is we should see a turnaround in gold, and gold bias flip to the downside. So just to reiterate what we've been talking about, we've been talking about the potential for some risk on attitude going into next week. That should highlight a weakening in the Japanese yen, which could lead to higher levels in dollar yen and sterling yen. We've got those large patterns, and we've also talked about gold, the potential to see a topping formation, and also a potential weekend trade if anybody wants to be stuck in front of the screens on Saturday and Sunday. For Bitcoin, we could be seeing quite an aggressive move to the downside in the CD leg of that crab formation. Okay, I hope that all makes sense. All the best with your trading. Have a great weekend, and I'll be back again soon with some more analysis. Many thanks.